Every year, Motilal Oswal publishes its wealth creation study. It's a treasure trove of insights, long-term themes, and the structural forces shaping India's markets. And the 2025 edition frames a bold narrative. The title is, the theme is India, the multi-trillion dollar opportunity. A theme inspired by two seminal books, The Wealthy World and Brave New Wealth World, both of which argue that financial wealth has no upper limit. The study begins with a simple observation. India is getting richer faster. Over the last 20 years, India's market cap, it says, in rupee terms, has compounded at 17% annually. Market cap to GDP has risen from just 0.5 times in 2005 to 1.3 times in 2025. It's a sign of deepening markets and rising financialization. This sits on the back of India's own growth trend, a 17-year CAGR of 8%, the so-called next trillion dollar or the NTD era, which is behind us. In analyzing this period, the study looks closely at the true compounders out of the top 500 companies. It finds only 35 out of the 500 companies, just 7%, managed to compound at 23% in this period. Their characteristics are telling. Most belong to sectors with strong tailwinds. A majority were consumer-facing businesses. 3/4 were already market leaders in 2008. That is the starting year. 4/5 enjoyed return on equity above 15%, and more than half traded below Nifty PE in the base year, that is 2008. So starting valuations were low. The next chapter in the wealth creation study looks forward, looks ahead. That is from 2025 to 2047. And that is the multi-trillion dollar era, or so this period is framed by the study. The MTD era is India's journey towards India at 100, a period where both GDP and per capita income are expected to accelerate meaningfully. The study also lays out a instructional a portfolio, a collection of businesses that, in Motilal Oswal's view, the wealth creation study's view, can navigate this long runway of compounding. Well, the message is clear from the wealth creation study: compounding economy, compounding growth. The financial system and the world stock markets are emerging as the new invisible hand. Where the world is getting wealthier, India is getting wealthier even faster. There is no absolute ceiling to financial wealth. As discretionary consumption, savings and investment hit their tipping points, the multi-trillion dollar era could throw up a whole new generation of compounders. That's the context. I mean, it's a long report. I've tried to in this short preamble, lay out basically the crux of what the report is saying. But we have the architect, the author of the report, who's done this for, decades now. Raamdeo Agrawal is with me. Raamdeo, great to have you with us here.
Very good morning.
Thank you for joining us, and I hope I didn't get anything wrong in that preamble.
No, it's absolutely bang on. I was listening to it, and there's a lot more. I mean, we could write only that much.
Correct.
But I think it's a very fascinating subject. I mean, I've been kind of a student of wealth creation and things like that. But one of the things which didn't strike me is that that the form of wealth itself has undergone major change. I mean, if you look back, say 200, 300 years back, before the companies came into being, what was the wealth? The concept of wealth was you had a state, basically physical. You had gold, silver, maybe a palace, So those were the things which were very physical. From there, if you ask today, I mean, maybe Shah Jahan, maybe Akbar, or maybe some king of Europe or something, they were all had this physical wealth. Come today, who's the king today? Today, Elon Musk, Bill Gates. What do they have? Does anybody ask how many acres of land he has, how many palaces he has, how much gold they have? No, they only have market caps. It's all paper wealth. So from a physical, the whole world has transited to paper wealth actually, and now paper is becoming actually digital wealth. So the concept of securitization, which actually led to this entire creation of wealth, I mean, when you start issuing stocks, that's what really, with the start of a joint stock company and public participation in the stocks, that's where I think this wealth machine started, and now it has become gigantic. And that's what this book is all about. This book says that the world is getting wealthier, and India is getting wealthier actually faster. So what is the size of wealth being created in the world, financial wealth only.
There is no relation to the underlying
Yeah,
real
so
assets.
there is a correlation, but it is rising much faster. Like world wealth.
Let's use your favorite. I mean, you're a Buffett buck.
Yeah,
I mean,
yeah.
his favorite kind of the one metric he looks at is market cap.
GDP. Yeah.
Now you write in the report. Well, traditionally it is seen as that when it reaches one.
Yeah. So he wrote Buffett's on market in 2000.
Yeah.
That was a very seminal report. That's why this ratio is called Buffett ratio.
Correct.
Okay, so market cap to GDP. Nobody compared earlier.
Right.
So he said 1 time to GDP is a kind of a glass ceiling. It is a good level of highs of the market, and lowers can be whatever 40, 50, 60 and all. That's what was the theme earlier. And that's how even we were shaped. Okay, I mean, GDP is a very large number. I mean, why? I mean, that should be the some kind of glass ceiling.
Now in the US?
Now in US, now it is at 2.3 times. $71 trillion of market cap and $30 trillion of GDP. That is absolutely kind of a very different level, which this professor predicted in 2000. That the actually limit could be as high as 5 times. So what happens is there is a virtuous machine. So the wealth is being created in the market, and then that wealth has a wealth effect. Say if Motilal Oswal creates wealth, they have their own wealth effect in terms of what I will do. I'll buy a big house, I'll buy cars, I will do donations, I will do big marriages. So with that, the actually wealth melts. So that melting goes into real economy, and then real economy, apart from income-led growth in the economy, there is a wealth effect in the economy, and both of them, they propel the economy to higher level, higher corporate profits. That leads to further higher wealth creation, higher wealth creation, higher wealth effect, higher economic growth. So like that, this virtuous cycle continues, and that's what is happening in US. And India is a very, very fortunate country to have this. It doesn't work in every country. This machine of securitization or capitalization doesn't work in every country. I mean, there are very few countries, of course, Western countries. So now it is called new invisible hand. This markets or this wealth creation or securitization is the new invisible hand. So that is allocating who should be rich, who should, and where should the allocation go. And all the savings of the economy is getting redirected through stock market to the real economy.
I just had a basic question, right? I mean, India's per capita is under $3,000. Typically, what we've seen around the world is that this level of access to financial products in India, what we have, typically happens at a much higher level of per capita. It's already happened here.
And people accept
it. Are there any implications of this? I mean, is it a good thing, bad thing?
Fantastic thing. I mean, we have a $5 trillion market. In next 4 to 5 years, less than 5 years, we'll have a $10 trillion market. The way we are managing it in a very disciplined way. Our regulators have been very disciplined, and financial system has been managed very well so far. I mean, from the advent of...
Is there a risk of over-financialization at this level of per capita GDP?
Markets will keep correcting. It is self-correcting mechanism. So you don't have to worry about it. You don't have to unnecessarily worry. And unless there is a corporate earnings, nothing will get supported. I mean, maybe 22 people might go to 24, 25, but then the supply will come, which is what is happening right now. So at the moment market gets overheated, there will be a lot of supply of paper, and the moment market gets depressed, all the supply evaporates.
You created in that report, there are India at 100 portfolio, that is 2047.
Yeah.
I mean, we are talking at a time when technological change is, I mean, right up there, right? Who knows? I mean, we're talking about, AGI, that is super intelligence in 2 years. So what effect, we can't imagine the framework in which it will affect. So how can we create, or what's the framework to use to kind of build such a long-term view, really?
Yeah, so here comes India, the multi-trillion dollar opportunity. In this continuously rising wealth of the country, we went from NTD era from 1 to, we wrote the first paper of next $1 trillion in 2007. From there till what is the journey of 1 to 4 in last 17 years. So that we have tried to examine what really happened, what we said and what really happened. Of course, directionally it was right, but the time-wise it took for 5 years more because of COVID and demonetization. But we are there from 1 to 4. Now it is a multi-trillion dollar journey. 1 to 4. Now it is 4, 8, 6. In next 17 years, most likely India is headed to become $16 trillion GDP by 2040 or so. 40, 41 or
42.
42, yeah, 17 years.
17 years.
We are not economists. We are just extrapolating what has happened in the past, and there is no reason to believe it
And you don't
cannot
think we
repeat
should, that assumption is 12% nominal growth for the next 17 years, but you think we should not quibble too much about whether it is 10
Don't
or...
bother about it. I'm telling you, don't get into this petty things. I mean, it might become even 13%, and it might become 11% or 10%. That maybe 42 will be 44, or 42 can also be 40. If you don't have too many, see, the journey to 4 to 16 is not going to be without potholes. There will be enough potholes. What will be the name of those potholes? Will it be called COVID? Will it be called demonetization? Will it be called some other geopolitics? We don't know. There are, every trouble has a different name. GFC happened last time. So there will be some trouble. I guarantee you there will be trouble. Okay, so the potholes will be there. The issue is that 17 years out, we will be 16 trillion economy. So that is what you have to have that faith that yes, this is going to happen. Now, what is the power of this particular compounding? It's the same level of compounding we say. But the issue is the base is different.
Base is much higher. So
you're starting not from 1, you're starting from 4.
Correct.
It's a multi-trillion dollar opportunity. So when the 4 goes to 16, the delta is $12 trillion in the same period. In the last 17 years, you had delta of $3 trillion. And here you have so it is a 4x injection of wealth.
the same rate of growth in that sense.
Yeah.
Is,
and then on top of it, you have a wealth creation, which is also of bigger size than that. So in next 17 years, I would think you could be $20-25 trillion market cap economy. So, I mean, these are all wishful thinking. It will happen, and it will happen at a pace.
As you write in the report in 2008 also, when you say when we predicted this, directionally we were right, but timing-wise maybe
slightly,
that's
but it can be earlier also. This time in the last 1 to 4 was little later. In right now things look so good that because then you have the policy paralysis and all that. See, today countries run very well. But what is the guarantee that 17 years it will be run very well? You know, after a good running, typically you get slightly sloppy ones. So you don't know what is going to happen. So that's why you must keep a broad this thing, that 17 can be 15, 17 can be 19, but it can't be 27. That's what I'm saying. So now if you get directionally right, then how do you play this inside? The way to play inside is what exactly is going to happen. The moment you cross your per capita GDP, about 3,500 thousand, India doesn't consume much. Everything is underpenetrated. You might see today in Nestle's interview. This guy, Mr. Tiwari, he's saying that they are going to become aggressive because the penetration of all their products are very low. So as you go to 3,000, 3,500, 4,000, at 4,000 the biggest thing happens, that is the explosion in the car demand. And that is the Chinese experience. They were about 4 million cars per year in 2007 or 8. And by 2012, when they doubled this thing, now they produce about 25 million cars. So this kind of journey is going to happen in India in a very accelerated fashion. Whole lot of discretionary stuff in consumption. One is of course this. And then I think the biggest of all, I mean, you can go category wise, all the discretionary, whether it is a premium food, premium houses, transportation, entertainment, travel, cars, I mean, whole lot of, then you go to business wise and company wise. But the biggest is going to be the savings and investment boom, which has been on for last 5-6 years. You might be seeing that. But I think what is ahead is multiple times bigger.
You actually identify, this is a shorter version of what we will do later today evening. But what you identify is financials, including capital markets as well, and consumer durables. Is the other kind of big area.
All the discretionary spend, all kinds of, I mean, starting with the car. Car is the one big item. Actually, the house is the biggest item. I mean, like, I'll buy 100 crore house, but I'll buy maybe 5 crores worth of car. So the ticket size of car is much smaller than house. So I think one of the biggest boom is going to happen in real estate. Now the issue is that there are hundreds of suppliers of real estate, but in the car there are only 2 or 3 suppliers. So that's the fun part of it. That because the ticket size is very large, it's deeply cyclical, real estate. Whereas a car is of reasonable size, it's much more secular. So you have to, then comes to making money. Making money in the market is different than talking this macro. So, and that's why we have suggested these companies. How we have suggested this company? Never take those companies as given. You know,
it's a framework.
It's a framework. So how we think. But then what is important is you have to buy something which is either unknown, small companies are unknown, or large companies are unpopular. Large, unpopular, or unknown growth companies. that's where when you marry a theme with this thought process, you get a multi-bagger.
Well, we could go on, and this is a fascinating study as always, Mr. Agrawal. We'll leave it there for now.
Yes.
But I think this gives a solid framework.
Yeah.
And as I said, we will continue this discussion in a much more expansive way
Yes,
in the
yes.
evening, when that study is actually unveiled for the public, etc.
Yeah.
Thank you very much for dropping by, as always.
Thanks for having me. Thank you.
Well, that's it from me here with the Motilal Oswal 30th Wealth Creation Study with Raamdeo ji. We'll take a quick commercial break here, coming back.